All right, what's good, everybody? All right, the long-awaited video. I finally had some time to do this. This is going to be my journaling video. All right, I am going to try and make this relatively short, but with the content that I think everyone really wants to know, like how I journal, how I kind of go through this and really analyze what I've done and what I plan on doing. One of the key things that I could tell you that I really learned to and why I journal the way I do is if you don't go back and look, one, why you took a trade and why you took a loss, you're doing yourself a disservice, right? Because you're really never going to learn from your mistakes. And that was one of the reasons, or one of the things that I wanted to really validate and qualify in my journaling process. Um, with that, the the other thing I wanted to really get from my journal is when I back tested. So in the very beginning, when I was developing my trading plan, right? And this is something maybe you guys don't know this, but a trading plan should be unique to yourself, right? I've seen people. I kid you not. I've seen people when I ask them, "Hey, let me take a look at your trading plan," to give them some help. Their name is like John Smith, and they literally show me a trading plan, and it says trading plan of Robert Morgan. And I'm like, "Who's Robert Morgan?" And they'll tell me, "Well, it's a buddy of mine who gave me his journal or his trading plan, and I'm using it." I mean, do what you want. I could tell you that the people I trade with, even though we trade the same strategy, even though we identically or we identify with the same kind of concepts, our trading plans may be different. Everyone has their personal level of tolerance that they want to accept in the market. Mine might be a little more than yours. Yours may be a little less than mine. And that trading plan, those rules that you abide by and you live by and you essentially trade by, should be, you know, designed for you and ultimately by you. So, how did I get to my trading plan? Well, I got to my trading plan through my journal. And what I mean by that is, I spent a good part of like 3.5 months without trading. I literally just went through and back tested everything. And there are some people that I know who I'm personally mentoring that are doing the same. And I can tell you that it's benefiting them exponentially. And what I mean by that is, I went through, I didn't care what session it was, I didn't care what pair it was. When I found a pair to back test and I back tested all the entries, I put it into this journal that I created. And through this journal, I was able to extrapolate data, right? It's all about the analytics behind it. So, when you guys hear me on a Zoom call talk about, "Yeah, I don't trade Asian session." Well, it's because in those 3.5 months of me back testing and putting all the data into this journal, into my journal, um, the information told me stay away from Asian session. It also told me stay away from counter trend trading, and that's ultimately why at the beginning of this year, for everybody that's been following me in both in Sam's Aporia group and in my personal group and stuff like that, I said at the beginning of the year I was going to make a change and I was going to stop counter trend trading unless it was either a hedge or there was a another bias behind the counter trend trading. It just wasn't because, oh, we have a schematic that I was gonna jump into. All right. And I could tell you that that has tremendously accelerated my compounding effect of my personal accounts. All right. So that being said, let's get into it. Um, a quick note. So what you're seeing in front of you is not a real journal. It is well, it is in the sense of my actual charts, my actual data. The only thing I've changed is the numbers, right? So there is no income claim. There is no, when we look at what's in here, all I've done was just change the dollar amounts. And the reason I've changed the dollar amounts is to one, kind of illustrate to everybody out there. I know the majority of people, their true goal in trading is to be a funded trader with a proprietary firm. So most prop firms, they're going to offer you a 50K, 100K, and now even 200K accounts. So what I did for simplistic purposes is I used a $100,000 account. All right. Now, granted, some prop firms, they don't allow you to hold over the weekends. There's a lot of rules with a lot of firms. What I'm going to do is, like I said, I'm using just a standard $100,000 account, and I took my journal that I have and I changed the numbers to reflect what it would be off that $100,000 account. Okay. So again, no income claims. There is no, this isn't, all this is for educational purposes to show you, ideally how I journal, why I journal, and the steps that go into it. All right. So with his journal, a little backstory. I created this going on about 2 years ago now, and took a lot of YouTube videos to learn how to use Excel. A lot of help from people I know, specifically my dad and my brother, to help me with understanding the formula processes and stuff like that. But it finally was done, and I have actually added to it. Funny enough, I did see somebody post a very similar journal not too long ago that showed it was created like maybe like 4 or 5 months ago, and I kid you not, it looks identical to mine. So I'm very curious to see where they got that journal from, and how they ended up in their how it ended up in their lap. But going through that. So the first thing is we've got tabs on the bottom here that I use. And very importantly, the first thing I do is, all right, we have to deposit some sort of money into this account for it to start. So like I said, I used a standard $100,000 account. So on the 11th of January this year, there was $100,000 that was placed into this account for starting a trading journal. Once that is in there, you go to overview, and the overview kind of just gives me the data that I want to know, right? And this is to date. I've updated it from as of finishing up my journals on Friday afternoon for the week. But you can see equity invested. The total equity invested that was placed into this account was $100,000. Okay. And all of this is extrapolated from my journal entries, right? I don't have to touch any of this stuff here. All right. And then uh, what I do is I have my variables, right? So what I do here is I have, because I track sessions, I track profit and loss and risk and reward, wins and losses, directions, whether it's long or short. I have it continuously moves the days of the week. I have a pro trend or counter trend. The signals, right, under a signal tab is how I track which type of entries I am more profitable with and I have a higher winning percentage with. So you can see I've broken it down by accumulations and distributions type 1 and 2. If it's a reaccumulation or redistribution, and I don't care if it's a type 1 to a type 4, for me, it's just the continuation move. Whether it's a simple structure and order flow entry. And what I mean by that is, maybe price has come into, we've made a higher high, and I would be using like a 71 or 78.6 fib. I could tell you that I to date this year alone, and this journal is just from the beginning of this year when I started trading to present. I haven't taken any of those entries. All right, my official journal from my larger account has told me to stay away from just taking retracement entries. All right. Whether it's another type of accumulation, like I've mentioned in the past, there are 7 types of distribution, 8 types of accumulation. So if it's an other, it would be labeled in there. Everyone knows my MC entries, which are the extreme entries, right? We put our limit orders on the extreme, and then of course my slingshot entry. All right. If I'm just going to put an entry specifically off of the slingshot candle. All right. And then the last thing is all the instruments, the pairs that I trade, whether it's Forex, metals in silver and gold, and then I specifically just trade U.S. indices. Oil is in there, but I haven't traded oil in a very long time. And then, of course, BTC and XRP. I could tell you that I haven't traded leveraged crypto this year yet. I've just been doing the exchange investments on it. And truthfully, the only reason I haven't done it is I've been doing my account's been doing really, really well with just currencies. Um, so it's all about finding that level of financial freedom, but also freedom of time. And, I don't want to be on the charts all the time. So when I hit my goals, I'm done. Whether that's on a Monday or Tuesday or it comes on a Friday, I'm going to be done. All right. So all of these variables are placed now into my journal, right? Into my journal. So we go down here to the journal data. And this is stuff that is just inputted uh, after I put into a trade. So typically what I like to do is, you can see I opened my first trade on the 18th of January. And it's just a drop down menu, right? You just find the date. What I typically do is, once the order is active, so the minute I put an order in and it becomes activated, I go ahead and place this into this journal. All right. And of course, the day that I close out the trade completely, whether it hits break even or whether, I've taken some partials and now it does this. Okay. Um, the following thing is the currency pair, right? So this is a drop down. You can go ahead and select any of the instruments that you're going to use, and that gets put in there. All right. Of course, position size, whatever position size I'm going to be using, the direction, whether it's a long or short position, and then the entry price, right? So that data is placed into here. Whatever my stop loss is. Now, based off the entry and the stop loss price, it automatically calculates the risk to reward, okay, to where I'm eventually going to be taking profit. Now, this is the overall take profit. So like on this UCAD trade, you can see my entry here at 27.87, a stop loss of 27.91, which was roughly like 3.5 pips to my, and it was a total of 100 and we'll say 87 pip take profit would be a 1 to 50 R to R. All right. Then of course, wins or losses is a drop down. If I lost, I would go ahead and put the equity that was lost. If I profited, I put the equity that was profited, and that automatically will calculate the percentage profit or the percentage loss. I have a withdrawal column. So when I do take a withdrawal, I would place it in there. And then, of course, a running balance. And this is updated just based off of the information that you're putting to the left. So everything in the blue here is automatically tabulated. Like I said, the signals, this is a drop-down menu. So I go ahead and I select what kind of signal that was. All right. So in this case, it was a type 2 distribution. And then this is where I put my comments. Right now, some of these comments are pretty short. Some of them are like long paragraphs. All right. Obviously, like when I need to get into it, I can just go up to the top and I can see exactly what the information provided is. All right. What I typically like to do is I typically like to review my journal. I really don't do anything on Saturdays, trading wise. It's my day to disconnect. But on Sunday mornings, like it is today, Sunday morning, 7:30 in the morning, I actually had just finished reviewing last week's journals. But I go through and I review my journal every week. I want to know what my shortcomings were, what my strengths were, how I can change things. Could I have taken partials a little earlier? Could I have tweaked the entry to maybe a tighter stop loss? Should I have made a wider stop loss? It's things like that. All right. So after I get that information on the comments, then you could see a session time, right? So my session times, whether it's Sydney, Asian, London crossover for me is that time. If on Eastern Standard Time, it's that 5 to like 8 a.m. Eastern time, which is that London going into New York. I like to validate and qualify that particular time frame because that's where I used to get a lot of really good trade setups. You could see, so Sydney and Asians on there. I haven't taken a Sydney trade in a very long time, and I very seldom take an Asian session. From there, was it a pro or counter trend move? Because I still want to validate that. All right, I still want to validate that. And of course, my closeout R to R. So when I finally close out of the trade, even though we have a average risk to reward here based off the take profit, but when the trade actually closes out, what is that R to R? So if I took a loss, it's obviously a -1. But when I do close them out, is it a 1 to 5.8? Is it a 1 to 64? A 1 to 76? So I do have that closeout time. All right. And then, of course, now is where we really get into what the journals are and things like that. So what I like to do is so let's take a look at this one here. So this was GA. All right. So GA on the 5th of February, I opened a trade. It was closed on the 9th. All right. There was two trades taken, so they were probably split orders. You could see I have a 9.4 and a 5.0 lot size. They were shorts. Average R to R was a 1 to 203 and a 1 to 95. You can see the profit taken. So it was a almost a 7% profit on the split order and a 3.5. All right. So what it just by looking at it, what it would show me is I did a total risk of a 1/4%. So an eighth of percent on the top order, eighth on the bottom. This was a redistribution. And you could see, so it was a counter trend distro during New York session, entry off supply redistribution off the 1 minute within a 5 minute distribution. It was a split entry, partials taken at the H4 extreme where I got into a buy for the hedge. All right. So this was a counter trend move, but I can tell you because I was already in a buy for GA, it was just a hedge. All right. And you can see I actually closed out at a 1 to 203 and a 1 to 95. So when we look at it, what I typically do is I like to um, put in the actual links, right? And just if you have a MacBook or a Mac product, what Mac does is when you screenshot your chart, it actually saves. And if I click on it here, it actually saves the file name as this right here. So it actually it allows you to always remember what your web address is going to be. So what I typically do is the file name I just copy and I'll paste it into the TradingView snapshot. So I always have it. So this is through actual TradingView. And then of course I have the actual screenshots that I save and make a little case study out of it. But on this, you could see this was the trade idea that I was looking at. It was off the 1 minute time frame. We had a distribution up here, and then we had a redistribution, right? You had your minimum 3 drives, and then ultimately you have an accumulation in here on the seconds time frame that breaks below that, confirming the redistribution. And this is the split order. I guess what I'm looking at is taking an entry off of 50% of that 1 minute candle, and then it looks like 80% of that 1 minute candle with the risk up to the top. All right. So that's the first potential or the image of the before. Then I have an image of the after, right? So this is the image of the after, and you can see the entry was based off of this redistribution, and ultimately price off the 5 minute time frame was within the H4 POI. Price showed a 5 minute distribution type 1, which requires a break of structure off the UT. A 1 minute redistribution, which was right here, was found during Asian session, and using the volume and price action to locate a redefined entry or a refined entry resulted in a position requiring a 3.1 and a 1.7 pip stop loss. Price closed on Friday at a 1 to 72 and a 1 to 30 and 1 to 39 off both positions. So it looks like I held this over the weekend. So we have that is the before and the after, and then I always have an image that I do on the larger time frame. So I always want to know where we are in the point of interest. So this was way back in February. You could see I was looking at this higher time frame redistribution that caused the low. If you guys have been following me, you know that I caught buys in here off this accumulation. And you could see where we're having this potential distribution turned reaccumulation. And the buy that I was in was actually from down here. We took this high off of that, confirming the reaccumulation. And I was actually looking for a buy out of here. So I was just selling it down. So this is where that sell actually happens in here to walk this down. So I have all of that placed in there. And then, of course, the last thing that I do is I have my case study, right? So I put everything into a PDF and I kind of just do a backstory on it, right? So starting from the very beginning, you could see this is that 5 minute potential distribution. Price does create a type 1 distribution with, and I'm looking for that break of structure, right? I'm looking for that break of structure in here. Price ultimately comes down and breaks structure here. And then this here, so here's that move up here. This is now our accumulation turned redistribution. So I'm looking in this area here specifically. This is that UTAT area. Here's our accumulation that turns redistribution. I did use the volume profile to really identify where I wanted to take my entries and give that confirmation. And then here's the entries, right? So I had one entry here, and then I had the aggressive entry off the 80%. Price does tap in And of course, you could see at this point we've broken order flow. So both orders were at a break even. Um, and then of course, where am I looking to take this down to? So we've broken structure on the larger 5-minute distribution, right? This is a type one, right? This was a type one. This was that break of structure that happened here. So obviously where I'm looking to take this down is down into my buy area, right? Looking to take it into the buy area. Here's the 5-minute view of it. And then that little excerpt that I put in there, so following suit, going through there, just some more screenshots. Here's the 4-hour reaccumulation where I was looking for the buy. So this is where I'm taking price down into. And then, yeah, and then here's the larger view. So that is how I do the case study on it. Um, so that's one example, right? That's one example how I worked it out. Let's go to a different one, right? So a different one would, okay, so let's go to this EJ, right? So we had EJ on the 5th of February, closed it out on the 7th. It was the lot sizes there. My position, entry credentials, stop loss, take profit. So it was about a 92 pip move that I was looking for. Looks like I did exit at that take profit area. It was a 1 to 34. It was about a 6% profit. It was a distribution type one, entry during New York session off type one distro. POI was a previous redistribution and 30-minute institutional candle. Multiple order flow entries presented. Targets were hedge by position. All right. So I do actually remember this one. I actually only caught one of these entries, but there were, I remember trading this live with a bunch of people that we actually back tested it as well. It did give, I think, like a total of 6 entries, but I only caught the one. This was a 1 to 34. And again, we look at the very first position. So this is how I'm looking at it, right? Price came in here. This was New York session. Price coming into the point of interest, we had a type one. And I think what I was looking at was for price just to break outside of the trading range because I had missed this original order that broke. You can see that price comes right nicely into this. We make a new low right here and then trade into this point of interest over here. So what I was looking at was just getting that next low. So as price, there you go. So as price came in and broke this low, this was the entry that I took. But you could see 1, 2, 3, 4 potential entries just walking price down. Risk to reward based off of TP of a 126 flat, just inside of the 1-hour institutional candle that created the previous bullish order flow leg. Buy hedge will be attempted in this area. All orders were on full risk as the previous order was placed to break even after a new low was created. Order flow took over and entries were made with creation of a new low. So total R to R, had I caught all 4, would have been a 4 to 177.7. All right. Just adding up the R to Rs. All right. Unfortunately, like I said, I only caught one of these. And you'll see right here when we do go over to the case study. All right. This is that higher time frame point of interest. This is where price came into this area of redistribution. We saw that smaller time frame distribution in here. So it's just showing the point of interest where I was looking at in this particular area. And then here's the case study. All right. So again, it all starts with the higher time frame, right? So on the higher time frame, I'm looking to take price into my buy area down here. All right. This was that 30-minute candle. Within that 30-minute candle, again, I've got my notes. I was confirming type 1 requires a break of structure off the UTAD. So this was that break of structure. Here's your UTAD. I unfortunately couldn't take this test entry here because we didn't get the break of structure, and that's what that's showing. So entry was off 50% of the candle since the wick attempted the open. All right. Going into it, you could see the second entry right here. This is where I took it, position to break even at that point. Little larger time frame showing the potential entries and then walking it down, right? Entry off the 3-minute open and balance present on the 3 and the 2. So I'm just giving my confluences why I took the trade, showing a little bit of that line chart that we did get the break. Again, just going back and showing order to break even. So this is how you could have positioned yourself in the multiple entries. Um, and walking it down as price breaks a new low, going off of the potential entries. And like I said, I know a couple of people that were able to grab at least 2 or 3 of these positions. I personally only grabbed one. I think I was at like my chiropractor appointment when all this was going down, if I remember correctly. Um, but it was a pretty good candle, or it was a pretty good setup off these candles. And just walking price down, right? Just walking price down. You could see it walking in. This was the setup, like 7 o'clock in the morning when this was all going down. What we were looking for, what I needed my confirmations for entry were, how I was going to play it off, and just working it down. Right. So this is how I take my screenshots. You can see this all started at 7:02 in the morning Eastern time. And I take a bunch of them. This was same 7:02, and just me adding notes as I'm walking it down. 7:06. Um, 707, and finally when I get the entry, right? Entries in, order to break even, and just walking it down. All right. So all in all, it was a pretty good trade. Like I said, this was a total of 2 to 41.8 with the potential of a 219 to get all the way down. But very good setups, right, on EJ. So let me just show you one now with a loss, right? So hold on, let's go over here. Where is a loss here? UJ, right? So UJ, 24th of March, it was a 9.01 lot. The credentials there, which made it a 1 to 37. This was a loss. All right. You could see I lost, just under 1/4%. It was a redistribution, and my notes on it, right? Entry based off of a previous lower time frame leg, order flow, a redistro, entry off the 6-minute open. Order should have been deleted after seeing the mitigation from a previous attempted mitigation. Seeing order flow should have reaffirmed the bullishness coming from the previous demand zone. All right. This happened during New York. And again, this was a counter trend move. It is what it is. Again, you'll see very few counter trend moves unless they're hedges. All right. So the image that I was looking to capture going into this was right here. So this is the image. I was looking to play it off of this 6-minute candle, this redistribution right in here. The image after. All right, stop loss hit. And what the notes I wrote in there was that when price ultimately came in, this is the entry I was looking off of this 6-minute, and price comes in very, very close. I think it misses that entry, I think by like 2 pips, and then drops off something like 30 something pips. The order should have been deleted. All right, at that point, this was a very needless stop loss. Okay. Um, and same thing here. Like even if I was in this trade and I got activated here, when price moved that, I should have reduced the risk. All right. So, I put in, my notes, how I, ultimately should have changed the way I've traded this. It was a needless stop loss hit, but it is what it is. And then of course, higher time frame. Here's your higher time frame, right? The reason I was looking for sells on UJ is because we did trade into that daily 50%. All right. And I was looking to take it down into this reaccumulation. All right. So that's why it was counter trend. All right. And then of course the case study on it. So here's the case study on it. So I'm not going to say UJ was a bad deal because I did catch some really good sells on it, right? You could see, so the first, we had this larger schematic in here with a fractal schematic on the lower time frame here that broke structure, and I was looking for that original sell out of here that we caught. This was that sell, really nice entry. I did take partials taken after the new low. So I did do that with accordance with my trading plan. I was looking at this area here of accumulation. This was a very valid demand zone that we needed to get through. And ultimately, I was looking for a buy out of it. This is what price did react off of. Here's the selling position I was looking out of this 6-minute candle in here. And this was the sell, right? I caught this sell. It was a nice little 1 to 27 coming down. Price does come into demand. And ultimately, this is the second sell I was looking at, right? It was just a continuation of order flow. This is that small loss that I did take, right? Small loss that I did take. And ultimately, this is what it looked like on the intraday, right? It was confirmed a reaccumulation. So, of course, now I was going to be looking for buys out of it. All right. But when I look at you, Jay, like I said, I mean, I took that small loss. Where is it? I took that small loss right here. Okay. Just under a 1/4%. But the days before that, where I caught the original move, I made just over 1.5%. Right. I made just over 1.5% on the sell going down. So it averaged out. All right. Nothing wrong with that. Um, some other little ones that I did. I'll go to the ones like I did this weekend, right? We'll look at like GA. All right. So GA here, it was a long 4.36 lot size, got the credentials in here, stop loss. It was a 1 to 44. I did take a really small loss. You could see it was $52 where I normally would have risked 250 on this. So it was a very small loss. It was a reaccumulation. Price came into the lower time frame point of structure and built a lower time frame schematic. Within the schematic, multiple seconds time frame schematic was occurring. Price came into entry, and on order flow change, position was moved to a reduced risk. Right. So this was pro trend. And you can see here, this one was actually pretty crazy. So here's what I was looking. So this was on the 5-second time frame. You could see we had our attempted distribution, we had our accumulation coming out of the distribution, which actually turned this larger thing here into a reaccumulation. My confirmations for the reaccumulation occurred right here. You can see my Jack and my BOS. I was looking to play off of this candle here with the stop loss here. So following seconds time frame structure and order flow attempt made off the reaccumulation. All right. That's how I was looking to play that. Here is what happened, right? So took the entry. Price did give a reaction as price came back down and made a new high here, right? I reduced my risk. So I took my risk from the bottom here to right here. That's where I reduced my risk to. So stop loss hit. The reduced risk saved 58% of the $250 that I was risking. All right. So it was actually a benefit. And one thing I'll tell you is if you're able to reduce your risk, right? If I lose 4 times, but all 4 times were a reduced risk, I've saved my equity. All right, I've saved my equity. And of course, on the higher time frame, this is what it looked like, right? We saw this distribution and we failed to make that high. And this is the area right here. So this is what was maintaining lower time frame structure. As we came down into it, this is where I was looking for the buys in here. And ultimately, when price invalidated that low, you can see now I'm looking down here, right? With the failure to make a new high and lower time frame leg, a schematic will now be required for a buy position out of here. So I'm just preparing myself for the upcoming weeks on this. And then lastly, like the case study I did on it, right? Case study on it is right here. And this is how it looks, right? So this was off the 5-second. Obviously, I didn't have anything marked up because when I saw this happening, I went ahead and I knew where I was taking the entry. This was at 10:14 in the morning. I ended up having to go back and write out my notes and stuff like that because sometimes I don't have time to write my notes on it. All right, but you can see on the 1-minute time frame coming into this is what maintains lower time frame structure. So we're in the valid area where I was looking. We have a bunch of preliminary supports. We do have a really clearly defined accumulation occurring. We get our spring, right, with a fractal accumulation that happens in there. Price actually reacts, right? I found the 8-minute candle. This is what price actually reacted off of, right? Lower time frame structure point was the 8-minute institutional candle. It reacted beautifully off 50% of that. All right, really nice. Made a new high. You would have been at break even at that point. So on the 1-second time frame coming in, so and I know I'm not going to do too much education on this. This is just more for my journal, but I definitely see a type 4 1-second accumulation in here. And this is the candle I was looking to play off of right here. It was a 1.4 pip stop loss. You can see the plan was to take entry from the 1-second candle type 4 within the 5-second type 2. The idea would be invalidated with higher price action. So, at this point, if price did something to make some new order flow highs, I would be deleting this order. So all of that 1-second time frame was sitting in here. This is that 15-second type 2. Entry ends up missing right here. This is the entry I was looking to take. Entry missed by 1 pip. All right, 1 pip and then made a new high. So, I'm just telling myself that the entry's still valid. All right, until it's not. And at this point here, this is no longer valid, right? Because now what have we done? We've broken this high, came back for a slingshot and made a new high. So after breaking the high, confirmed entry for the schematic, price creates a reaccumulation. The accumulation part of the reaccumulation trades into 30 seconds of the institutional candle. So I found that this traded into 50% of this 30-second candle. This was the slingshot that created that high. All right. So, this was me working some entries. I want to say this was on a Thursday morning, where I was looking. So this is that 30-second. I've got my notes. And of course, now my attention is drawn into this, right? That's my attention now to really work an entry in off the 5-second time frame. So following seconds time frame, structure and order flow attempt made off the reaccumulation with an entry within IPA. So you could see the imbalance sitting in here. This was that entry that I took off the 5-second. This was that screenshot of me confirming the reaccumulation. There's the entry, reduced risk, stop loss was reduced to the bottom of the move, right? After it gave me a higher high. And then ultimately what it do? It crashed, right? Hit my reduced risk, all is lost, no worries. I took the small loss. This now is a confirmed redistribution, right? Confirmed a redistribution. And lastly, because now I'm looking down in here, this is where all of that was taking place on Thursday. I now require a schematic, most definitely in here, because this accumulation was unable to make that break here. Okay, it was unable to make that break. So that was an example of how I walked myself through, kind of wrote my notes, and ultimately back tested it and made some corrections to potentially what I'd be looking at doing next time. All right. Just some other ones that I was looking at. If we go to like Pound Chef, I took 2 split orders on Pound Chef credentials. It was a 1 to 52, 1 to 32. I did take partials on one. The other did break even. Right. So I was able to secure, realistically 1.3 percent profit on it on a 100K account. They were type 1 accumulations. You can see here, Pound Chef created an intraday type 1. Overall structure is bullish. First attempt at longs will be from the SC area that created the break of structure and confirm the type 1 schematic. As price came into the point of interest, fractal schematic was created, 25% partials taken at $756, which price created a new higher high, second partials taken at $575. Okay. So New York session, pro trend. All right. And we can see, so like just going off higher time frame, what was the higher time frame point of interest? Well, the higher time frame point of interest was this large schematic. And what I was specifically looking at, I found the 193-minute candle lined up pretty nicely, right? 80% of the 193, 50% of the 26. But because this is a slingshot area, it still requires a schematic. So that's what I was waiting for, right? Waiting for that schematic in that point of interest. So lower time frame, here she is, right? So we do have a 1-minute type 1. There was unable to take the test of the spring due to no break of structure, right? Every entry I take needs a break of structure. So now I was looking at this candle here, all right, specifically 80% of the 1-minute candle is where I'm looking for potential entry. My stop loss is below the spring, right? That's ultimately how I'm looking. So price failed to make a new high, which maintains structure. And what I'm looking at here is from this entry, you can see that price makes this leg. And I've got the red, you can see my little circle balls that I took from one of the guys that I'm training that I kind of like. It looks a little cleaner to really identify the structure points. Well, because price gives this 50% retracement into this move, but fails to make a new high, I can still play off of the 80% down here. All right. So this is still a valid move for me. And ultimately, you'll see what happens, right? This is the after effect. So I was able to get into a position here on this break. First partials taken, I took 25% secured here, and then as we come into a supply, I was able to secure just a little more, and I believe I used 27,300 as the whole number. All right, because this is what still maintains bearishness, right? This is that push down, that leg. All right, so secured half of position 1 at a whole number 127.30 as price traded into previous bearish structure supply points. So I took my partials. I was still able to secure, a little over 1% profit on it. And then, higher time frame. Here's your higher time frame, that 193 that we covered. Here's the case study that I did, for my notes when I closed everything out. So just going off of it, higher time frame, We're in a 1 hour schematic. So we're obviously looking, I'm still looking for an entry off the test. This particular area that we were looking at was the slingshot here. So going into it, you could see we have a 3-minute schematic. What I was looking at inside of that 3-minute is also the 15-minute candle. All of that showed, that schematic is what pushed this move here. So I want to see a mitigation coming out of that. As we go in, you can see the 30-second schematic that I'm following this is what the 15-minute looks like. This should be pretty clear, right? We have a type 1 schematic. Here's our spring. So that's what the entry was based off of, right? Everything was based off of going in here. I've already covered that on the previous go, but here's price, right? So price comes in, taps into my entry, and on the break of the new high, right? Because we have this low, we have this low. So ultimately, when we broke that right in here, break even, right? I went to break even. And then of course, here's where I take my partials, right? As price breaks this first high, this is where I'm taking my partials. I paid myself my 25%. And as we trade it into supply, I'm going to go ahead and look for a reason to get in and take a second partial. So I took just a small amount of partials there just to pay myself. And then ultimately remaining of the order hit break even. So I tried again. The reason I tried again is because we haven't broken structure, right? So you could see that this was the schematic that made this high. We came down and made a new high. So this is what's maintaining structure. So even though I hit break even, I'm still sticking with it because you can clearly see here the type 1 schematic, right? Stopped out at break even, second attempt based off lower time frame structure. So as long as we got that, this type 1 playing out, which is right here, I'll give it a shot. All right, I'll give it a shot. So we have a little divergence on the oscillator with the RSI. All right. So I'm looking at 50% of the spring, right? 50% of the spring is where I was looking for an entry. We did get confirmation for entry here. So we had some confluence. There's my entry. And at this point here, I reduced my risk. And the reason I reduced my risk is I got entered here. Price showed a reaction, came down, and now has done another reaction. So am I going to break even? No, but I'll reduce the risk, right? I'll reduce the risk all day long on it. I don't mind it. And at this point, I went to break even, right? Because we've made a new high. So I went to break even. I had plans of taking partials, and you could see what happened. I figured that this was a redistribution. Price taps into 80% of that. I was actually looking at taking partials at 27,100, and looking back at it, would I have taken partials? Not really, because I was only up a 1-3 on it, almost a 1-4. So this ends up hitting break even. It is what it is. No big deal, right? No big deal. No harm, no foul. But this is just like an overview of how I use my journal to my advantage, how I mark everything, and how I keep everything organized. Now, with that information, I create every day. It's automatic based off of this. I get daily equity reports, so I can see the sum of my losses, the sum of my profits, and then ultimately what the daily profit is. So this day here I made 14.78%. This day here I lost 0.18%. So it gives me my daily equity, and based on the daily equity, I know, one, how I'm doing, and two, I have daily shutoff allowances. So when I hit a particular price point percentage goal, I'm done for the day. Especially if I hit it for the week and the month, I'm done for the week and month. Which is nice. With that information also tabulates my chart data, right? So in here, you could see my profit and loss by month, right? This automatically is calculated from my journal. None of this is inputted. This is all calculated from the journal. My equity by month, trades, wins, and losses, right? So you can see there's some times where I only win 30 something percent of my trades. Obviously, February, March, and April, I'm in the 60s, which is pretty good. But I don't win every trade. All right. I know I don't win every trade. I go into just a little with mindset. I go into every setup knowing that I'm probably it's a 50-50 shot if I'm going to win this or not. What really makes a difference is both my risk management and my trade management when I'm in the trade, but also the confidence I have in these setups. So every pair up here, you can see every pair is calculated. So based off of my journal, it'll tell me, one, the pairs that I'm really good at trading, and some that I should stay away from. All right. You guys have heard me talk about Euro Chef. It is the only currency pair that I have a negative number on in my actual journal. All right. Um, and then this is that signal, right? So why do I tell everybody put your limit orders on the extreme? Well, because off all those entries, limit orders off the extreme gave me a net of 18.14% in the last 3.5 months. All right. But you can see, if you're better, and for me, I'm a better accumulation trader than I am a distribution trader. So I know that sometimes I just have to invert my chart so I can see the distribution better as an accumulation. But this kind of tabulates that information, right? Profit and loss by trend. Now, obviously, I've changed my ways significantly. I don't counter trend a lot. All right. But obviously you can see this, right? Pro trend versus counter trend. Now my losses are very small because I've stopped taking a lot of counter trend moves. All right. And then of course, profit by session, right? Obviously I don't trade Sydney. And thanks to Euro GB or JPY and GA, Asian session is a little high, but this is something that if you're going to back test a lot of stuff, use it. This is one of the biggest reasons why I stopped waking up for London session, is because I found that I make just as, I made a significant amount of profit during New York session that I didn't need to wake up early. All right. So for me, London session is getting up at like 3 o'clock in the morning. So with all of that, this also creates charts, right? My thing, this is automatically tabulated from that data, so I can see my profit and loss, my equity, my winning versus losing trades, right? And then you can see every currency. So obviously GA is the big winner so far because I've just been slaying GA this year. NZD CAD also, I didn't talk about that, but NZD CAD was just a phenomenal trade this year as well. And you can see like AU's in here. And then, there's a couple of ones that I've taken losses that I'm negative on. The year's pretty new. So I haven't had a lot of data to put into this so far, but as you go through the months, weeks, and years of trading, this all really starts to make sense to you, and it really gives you a lot of data. And then of course, profit and loss by the type of strategy. So extreme limits, type 1 accumulations, right? This is why I'm a big fan of type 1s. And obviously I'm a better accumulation trader than distribution. So, you can see why these are there. All right. Now, the last thing is all of that is also thrown in my overview. So in my overview, when I first opened my trade, my trading journal, I can see that I've only taken so far year to date 63 trades. That's it. That's it. I can see my winning trades, my losing trades. Now, the average risk to reward is the big thing. My average risk to reward. All right. And then, of course, you can see my average losing trade is $200. 200 bucks, and I risk 250 per trade. So reduced risk is actually saving me. The average trade, so I make, whether I win or lose, just out of all 63 trades, the average profit is 85 bucks, right? Off of a $250 risk. I know that seems kind of small, but that's factoring in all the losses as well. All right. Now, averaging out my winning trades, so just winning trades, that would be just about 4.5%. Is the percentage that you're going to be making, or that I would be making on the setups that I've inputted in here. All right. So, and of course, I have my withdrawals. So that's why this number is a little off, right? Because I have only this account started with 100K, but obviously I've taken $66,000 out of this particular make-believe journal to show that, all right, equity has gone down, but percentage is still up. All right. So this is breaking down how I journal, why I journal, all the information that goes into my journal. I can tell you it does take a little bit of time to do all of this and to input all of it and to track it. One of the things I can definitely say is that if you don't have time to journal, in my opinion, you don't have time to trade. So if I find myself that I'm falling behind, like if I'm a good example is like 3 weeks ago, I had some family stuff I was taking care of. My girls were traveling everywhere for sports. So, so I couldn't do a lot of trading, and the small trading I did do, I had a journal. So when I got back in town, I really honestly didn't even trade the first week I got back because I had to make up all of the journal entries, all of the breakdowns, everything that I personally needed to put into my journal. Um, that's what I had to make up. So if you don't have time to journal, you don't have time to trade, because you don't want to needlessly get into positions, and one, not be able to learn from them, but two, not be able to really analyze and put the analytics behind your entries and how you manage the trade into your journal to properly give you you know a really good outcome overall. So, but this is my journal. Like I said, it wasn't that hard to create. It probably only took me about a month, and I had honestly no experience really with Excel when I did it. So I will, like I said, I will, I'll drop this on my YouTube page. It, if you guys have some questions, definitely jump on my session on Tuesday nights at 7 p.m. Eastern. I'll try to answer them. And I mean, that's pretty much it. I will, I'll upload this as soon as I can, and go from there. All right, you guys. Thanks for tuning in if you did, and I will catch everybody hopefully Tuesday night. Have a good one.